All right, let's jump right in. Alphabet's massive capital expenditure upgrade just sent a literal shockwave across the Pacific. And wow, the South Korean market is aggressively answering the call. We're tracking a really fascinating transatlantic divergence today. Massive tech spending in the US is translating directly into a huge hardware boom in Asia. So let's break down exactly how this global market overlap just triggered a historic rally. So the whole catalyst for this started in the early hours with Alphabet's Q2 earnings report. They posted a massive $119.8 billion in revenue. That's up 24% year over year, totally crushing market estimates. Now, obviously, this top-line beat is a big deal, but it's the internal breakdown of this revenue that really sets the stage for what happened next globally. Look at this specific growth metric right here. Google Cloud revenue didn't just grow, it absolutely skyrocketed by 82% year over year, hitting nearly $24.8 billion. I mean, this isn't just incremental growth. This level of acceleration proves that the monetization of artificial intelligence and enterprise cloud solutions is happening right now and at a breathtaking pace. And to keep that engine running, well, Alphabet has to spend heavily on physical infrastructure. Which brings us to the absolute critical metric of the day. Second quarter capital expenditures hit $44.92 billion. That is roughly double the level from the exact same period last year. Double. They're just pouring cash into the physical foundation of AI, building out all those data centers required to sustain that 82% cloud growth we just talked about. And, they aren't stopping anytime soon. Alphabet capped off their earnings sequence by upgrading their full-year CAPEX guidance to a massive new ceiling of $205 billion. Just to put that into perspective for a second, that is roughly the entire GDP of New Zealand poured straight into AI infrastructure. It's an undeniable signal that this investment cycle is aggressively expanding. But here is where the story gets really interesting, that transatlantic divergence I mentioned. Over in New York, Alphabet shares actually fell in after-hours trading. Wall Street was kind of sweating the massive cash outflow. But over in Seoul, the market looked at this exact same data point and interpreted it completely differently. They didn't see a cost burden at all. They saw an ironclad confirmation for high bandwidth memory demand. You can literally see this financial shockwave crossing the Pacific. The KOSPI index immediately gapped up 2.44% right at the open. The Korean market instantly priced in a new reality. If Alphabet is spending up to $205 billion on data centers, the global suppliers of the critical memory chips for those data centers are about to see a massive flood of orders. This perfectly captures the broad market reaction. It was just an absolute sea of green, heavily led by the tech giants. Any lingering fear that the AI infrastructure cycle might be cooling off, that evaporated overnight. Investors realized the pipeline is completely intact and money just flooded back in. And that momentum held up through the entire session. By the closing bell, the KOSP finished an impressive 4.40% higher, settling at 7,096.89. This wasn't just a minor bump. This powerful rally meant the index confidently recovered that psychological 7,000 level for the first time since mid-July. And hey, this wasn't an isolated tech-only event either. We saw incredible breadth across the whole rally. Out of 943 listed KOSP stocks, 831 advanced. That is an overwhelming 88.1% advancing stock ratio across the index. The rising tide literally lifted almost all the boats. But to really understand the mechanics of this surge, we have to look at the main beneficiaries. Enter Samsung Electronics and SK Hynix. These are the absolute titans of South Korea's memory sector, basically forming a duopoly in advanced high-bandwidth memory. Simply put, when Alphabet spends, these two companies directly capture the revenue. Crucially, institutional money from overseas didn't wait around to see what would happen. We tracked a massive inflow of 2.15 trillion won in net foreign buying on the KOSPI. Global capital essentially rushed in to secure positions at the very center of the AI hardware supply chain. If we break down exactly where that foreign capital allocation went, it flowed directly into the memory duopoly. SK Hynix absorbed an astounding 1.32 trillion won in net buys, while Samsung Electronics captured another 350.4 billion won. Think about that for a second. 77.5% of the total foreign net buying on the entire KOSPI index was heavily concentrated into just those two stocks. That is extreme concentration. Foreign capital isn't just blindly buying the Korean market, they're laser-focused, aggressively chasing this specific AI hardware pipeline that Alphabet's spending just validated. Adding fuel to the fire, the rally got an extra boost from algorithmic trading. Non-arbitrage program buying injected another 1.8 trillion won into the cash equities market. Because program trading executes multiple stocks together as a basket, this massive influx of automated capital is exactly what helps spread the buying beyond just semiconductors, lifting the broader market to that 88% advance ratio we saw a minute ago. Okay, let's pivot for a second to a hidden signal buried in the data, because honestly, this is where this explainer gets really fascinating. There is a stark contrast between how foreign institutional investors and local retail investors are playing this exact same tech boom. It's a classic battle of direct versus indirect exposure. While foreign institutions were buying hand over fist, retail investors actually net sold a staggering 2.21 trillion won in KOSPI stocks. And within that massive sell-off, they dumped roughly 329 billion won worth of SK Hynix and Samsung Electronics combined. They were actively taking profits and exiting their direct exposure to the very tech giants the foreigners were scooping up. But wait, they didn't leave the AI sector entirely. We actually found a really clever retail pivot. Instead of holding direct shares of the memory makers, retail investors aggregated their buying power into a completely different target. Their number one top net buy for the day was 76.4 billion won, flowing straight into a company called SK Square. So why SK Square? Well, it's a holding company that owns approximately 20% of SK Hynix. It's a brilliant lesson in indirect market exposure. By buying the holding company, retail traders are attempting to capture the structural upside of the HBM boom, while sort of insulating themselves from the intense, day-to-day volatility of pure-play semiconductor stocks. Now let's zoom out from the trading floor and look at the macro picture, because this tech surge is absolutely spilling over into the real economy. The Bank of Korea had previously forecasted a pretty modest 0.2% quarter-over-quarter growth for Korea's second quarter real GDP. But the actual data? It came in at 0.6%, completely smashing the central bank's estimates by a full 0.4 percentage points. You can connect the dots straight from the stock market rally to this real economic beat. Manufacturing output jumped by 1.2% in the quarter, and it was heavily driven by exactly the sectors we've been discussing: semiconductors, computers, and electronic devices. The factories are quite literally running hotter to meet this global demand. And the physical proof is right there at the ports. Overall exports rose by 1.4% quarter over quarter. These high-performance chips being manufactured in Korea are being loaded onto ships and sent out globally in massive volumes to satisfy all those data center buildouts in the US and beyond. So what's the big takeaway from all this data? The connection is just undeniable. The US big tech capital expenditure pipeline, driven by companies like Alphabet throwing hundreds of billions of dollars at infrastructure, is directly fueling South Korean domestic macroeconomic growth. The AI boom is a global physical supply chain, and Korea is the critical hardware anchor. Which leads us to the absolute multi-billion-dollar question. The macroeconomic beat is confirmed, and we know foreign flows are highly targeted. But as global capital relentlessly crowds into this hardware layer, how long can this AI infrastructure supercycle actually sustain the broader KOSPI rally before the sheer law of large numbers catches up? That is the ultimate stress test the market will face in the weeks to come. You definitely want to keep your eyes on the foreign capital flowing into this memory duopoly. If you want to stay ahead of this global market overlap and get these Asian closing insights before New York even opens, make sure to hit subscribe. We'll see you next time.